All right, so we're always getting requests, and one of the more intriguing ones lately has been for a deep dive into Tilray Brands.
Definitely seems like there's a lot of curiosity around this company, and I can see why, right? You don't typically associate cannabis with, well, becoming a brewing giant.
Yeah, I mean, when we first saw this request with all the articles and data you guys sent in, I have to admit I was pretty surprised.
Yeah, I mean, it's not every day you see a company best known for, well, cannabis suddenly emerge as like the fifth largest craft brewer in the US.
Exactly. So, for our listener who put this request in, you sent us a really fascinating collection of information on Tilray Brands. And, to kind of kick things off, I think it's worth highlighting this. It's not every day a company primarily known for cannabis also, makes these big moves in the beverage industry.
Absolutely. Yeah.
So to get us started, here's a surprising fact. Tilray has actually become, like you said, the fifth largest craft brewer in the U.S. And get this, a significant portion of their current revenue now comes from, selling alcoholic beverages. So with all the articles and data you shared, the big question for you is this. Beyond all the hype around cannabis, what's the real story here for someone trying to, really understand Tilray Brands and its potential?
That's the key, right? We need to look beyond the surface. And that's exactly what we're going to do in this deep dive, specifically tailored to your request. We're going to take all this information you sent, articles, reports, the whole works, and break it down into, well, something a bit more digestible.
Right, because it can be overwhelming, all this financial jargon and market data. So we're going to cut through the noise and get to the heart of the matter.
Exactly. So when we look at Tilray Brands, ticker symbol TLRY, it becomes clear that there's a much bigger picture here than just cannabis. It's not just about growing and selling weed. We're actually looking at a global company, a consumer packaged goods company with a really diverse set of businesses.
Okay, so paint that picture for us. What exactly are we talking about here?
Well, of course, cannabis remains a core part of what they do, but they've also strategically moved into beverage alcohol. They have a wellness segment with hemp and CBD products, and they even have a pharmaceutical distribution arm in Germany.
Wow, that's a lot more than I initially thought.
Mm.
So where should we start? Let's unpack the fundamentals. What exactly is Tilray's core business model? How do they actually make money?
At their heart, they operate across the entire cannabis value chain. They cultivate the plants, they process them into all those different products you see in dispensaries, dried flower, pre-rolls, oils, edibles, concentrates, you name it. And they distribute these products through both medical and recreational channels internationally, wherever it's legal.
Okay, so that's the cannabis side, which we kind of expected. But then we have this whole beverage angle, which is pretty interesting. How do they get into that?
It's been a very deliberate strategy on their part to diversify, not put all their eggs in one basket. And the way they did it was primarily through acquisitions. So they acquired some pretty well-known craft breweries, Sweetwater Brewing Company, Breckenridge Brewery, Montauk Brewing Company, and then they made a really big move by acquiring 8 beer and beverage brands from, wait for it, Anheuser-Busch.
Wow, Anheuser-Busch, that's huge.
Yeah, that really catapulted them into a major player in the U.S. craft beer market. And that's how they became, as we said, the fifth largest craft brewer in the U.S.
So clearly a big shift from their origins, right? It's not just about cannabis anymore, it's about beverages too.
Absolutely. It's a fundamental change in their overall business strategy. They're really positioning themselves as this broader consumer goods company, not just a cannabis company.
It's not just cannabis and beer. What other areas are they involved in?
Well, there's the wellness segment, which is pretty interesting. They have a brand called Manitoba Harvest, which focuses on hemp-based food products. And they also have a range of CBD products, tapping into that whole wellness trend.
Right, CBD is everywhere these days.
It is. And then they also have this pharmaceutical distribution business in Germany operating under the name CC Pharma. So they distribute a variety of pharmaceutical products, including, medical cannabis.
So they've really branched out. It seems like they're intentionally trying to, change the way the market sees them, not just as a cannabis company, but something much broader.
Exactly. They've actually started describing themselves as a global lifestyle and consumer packaged goods company. It's a pretty significant shift in language, right?
It is. It definitely reflects a bigger ambition, like they're aiming for something much larger and, well, maybe more stable than just the cannabis market.
Right, because the cannabis market, as we know, can be very volatile. And that brings us to an interesting point because when you look at their financial performance, you see this headline of revenue growth, which sounds great on the surface. But when you dig a little deeper, you realize that a lot of this growth is actually coming from these acquisitions.
Okay, so explain that a bit more. How does that work?
Well, for example, a large chunk of the growth in their beverage alcohol revenue is simply because they now own all these new beer brands, right? It's not necessarily that their existing brands are suddenly selling way more beer. The same goes for their cannabis segment. The acquisition of Hexo really boosted their revenue numbers. So the question that investors need to ask is, what's the organic growth rate? In other words, if we take away the impact of these acquisitions, how much are their existing businesses actually growing? That's the real indicator of the underlying health of the business.
That's a really important distinction.
Yeah.
So we've talked about all these different segments, but can you give us a more concrete idea of what they're actually selling? What are some of their key products and services in each of these areas?
Sure. So in the cannabis segment, they have a pretty wide range, as you'd expect. You've got the traditional dried flower, pre-rolls, oils, edibles, concentrates. They also have these newer products like the Monsters resin vapes under their Good Supply brand, trying to keep up with those evolving consumer preferences.
So they're not just sticking with the basics, they're innovating as well.
Exactly. And then on the beverage alcohol side, their craft beer brands are obviously key. Sweetwater, which is popular in the Southeast, Breckenridge, well known in Colorado, Montauk, which is growing in the Northeast. And they also have a spirits portfolio through Breckenridge Distillery, along with other alcoholic and non-alcoholic beverages.
Okay, so they've got a pretty diverse lineup there.
And then we have the wellness segment with the Manitoba Harvest hemp foods, their various CBD products, and of course the pharmaceutical distribution business in Germany, CC Pharma, where they distribute both traditional medicines and medical cannabis.
So it's a pretty comprehensive portfolio, targeting a wide range of consumers.
Exactly. Now, in terms of their overall market position, they're a leading player in the Canadian cannabis market. They operate in over 20 countries worldwide. And with the acquisition of those U.S. breweries, they've really solidified their position as a major force in the U.S. craft beer scene, with about a 5% market share.
That's impressive. Now, financially, their market capitalization as of mid-March 2025 was somewhere between $570 million and $680 million US dollars. But looking at the data you sent, it seems like their stock price has taken a bit of a hit over the past year.
Yeah, there's definitely been a decline, and that often reflects a broader market sentiment, how investors are feeling about the company's future prospects. So that's something to keep an eye on.
So when we look at everything together, what's the core message Tilray is trying to convey? What's their unique selling point?
They're really emphasizing this idea of becoming a global leader in the lifestyle and consumer goods space with a strong focus on well-being. They want to be known for quality, safety, and trust, especially in the cannabis industry, which is still, navigating all those regulations. And their strategy revolves around building a robust portfolio of brands with a strong global supply chain. That's their vision for the future.
Okay, so we've got a good grasp of their business operations. Now, let's shift gears and talk about the people running the show. What can you tell us about Tilray's management team?
Well, the key figure here is Irwin D. Simon. He's the chairman and CEO. And he's got a pretty impressive track record, having founded and led Hain Celestial Group, which is, a big name in organic and natural foods.
Oh, yeah, I've definitely heard of them.
So he's got experience building successful consumer brands. And under his leadership, Tilray did achieve record net revenue in fiscal year 2024. However, and this is a big however, they're still struggling to achieve consistent profitability, which is a recurring theme in all these sources you provided.
So they're growing, but not necessarily making money yet, which is, well, a bit concerning.
Right, and that's a challenge that they need to address. Now, in terms of their response to challenges, they haven't been sitting still. During COVID, they implemented cost-saving measures. And with all the difficulties in the Canadian cannabis market, pricing pressure, oversupply, they've been diversifying into beverage alcohol and focusing more on international markets.
So they're adapting to the changing landscape.
Absolutely. They've also had to manage some pretty big acquisitions like Aphria and Hexo, which is never easy. But, the fact that they're still not consistently profitable suggests that there's more work to be done.
Right. It's one thing to grow revenue through acquisitions, but it's another to actually make those acquisitions work for the bottom line.
Exactly. Now, another important aspect of management is communication, right? How transparent are they with investors?
Absolutely. That builds trust.
And from what we see, Tilray seems to be doing a pretty good job here. They regularly publish their financial reports, they hold earnings calls, they issue press releases for any major developments, and they also provide forward-looking guidance. So they're keeping the market informed, which is definitely a good sign.
Okay, good to know. Now, what are the ethical side of things? Are there any red flags or controversies surrounding Tilray's management?
Well, they do have a formal code of business conduct and ethics, which is publicly available, and they have an ethics hotline for reporting any concerns. Now, based on all the information you provided, there don't seem to be any major ethical scandals or controversies involving the management team.
So no smoking guns there, so to speak.
Right, but of course that's always something to keep an eye on.
Yeah.
Now, putting all this together, the big question is, does Tilray's management seem honest, capable, and aligned with shareholder interests?
Yeah, that's the million-dollar question, isn't it?
Yeah. It is, and it's tough to give a definitive yes or no, right? They've clearly driven significant revenue growth and executed a major diversification strategy. But the lack of consistent profitability does raise concerns about their ability to generate long-term value for shareholders. So it's a mixed bag, and investors need to weigh the pros and cons carefully.
Okay, so that's the management side. Now let's talk about how Tilray is using its money. Where are they investing their capital?
Well, they've been investing in expanding their cannabis production capacity, especially at their large facilities in Canada like Afria One and Afria Diamond, to, meet that anticipated future demand. They're also putting money into marketing and building up their beverage alcohol brands like Project 420, which seems to be focused on brand awareness and market penetration.
So they're not just acquiring brands, they're actually investing in their growth.
Right, and they're also continuing to fund research and development in the cannabis space, exploring medical applications and new product formats, trying to stay ahead of the curve.
That makes sense. Now, we can't talk about Tilray without talking about mergers and acquisitions, because that's been a huge part of their growth story.
Absolutely. It's been a central part of their strategy. They acquired Hexo and Truss in the cannabis space, and then all those beverage brands, we talked about that earlier. And the main reasons behind this seem to be, well, gaining market share quickly, diversifying their revenue, and trying to achieve those cost savings through synergies, when you combine businesses.
So economies of scale, basically.
Exactly. But of course, acquisitions are risky, right? Integrating different companies, different cultures can be really challenging. And there's always the risk of overpaying. And if those synergies don't materialize, well, it can really hurt profitability.
Right. It's not a guaranteed win.
Definitely not. Now, what about returning capital to shareholders? Have they been doing any stock buybacks or paying dividends?
That's always a good sign, right? Shows they're confident in the future.
Yeah, but it doesn't seem to be a priority for Tilray right now. They haven't been doing any significant buybacks. They did do some debt for equity swaps to reduce their debt, which indirectly benefits shareholders. But they're not currently paying any dividends, which is pretty common for a company that's still in a growth phase and, not consistently profitable.
Makes sense. They're probably reinvesting everything back into the business.
Right. That's the typical approach at this stage. Now, one of the most important metrics for evaluating capital allocation is return on invested capital, or ROIC. It basically tells you how effectively a company is using its money.
So what does Tilray's ROIC look like?
Well, and this is a bit concerning, their ROIC has been negative for the past couple of years. For the quarter ending in November 2024, it was negative 3.75%, and for the full fiscal year 2024, it was negative 2.69%.
Negative. So that means they're actually destroying value, right?
Yeah, that's essentially what it means. Their investments aren't generating a positive return, which is not a good sign, especially when you compare it to their cost of capital, which is estimated to be around 15.12%.
So their cost of capital is much higher than the return they're getting.
Exactly, and that's a major red flag for investors. It suggests that their current capital allocation strategy isn't working, at least not in terms of creating value.
So what's the takeaway here regarding Tilray's use of capital?
The bottom line is that they need to improve their ROIC. They need to find ways to invest their money more effectively so that it actually generates a positive return. Otherwise, they're just going to keep destroying value, and that's not sustainable in the long run.
Okay, so we've got a pretty good understanding now of Tilray's business, their management, and how they're using their capital. Now let's dive into their financials. What's the overall picture of their financial health?
All right, so their market cap, as we mentioned earlier, is somewhere between $570 million and $680 million US dollars. Their price-to-earnings ratio, or PE ratio, isn't really meaningful right now because they're not profitable, so it's negative. But when you look at their revenue, they did see a 9% increase in the second quarter of fiscal year 2025. And their beverage alcohol segment grew by a whopping 36%.
So strong revenue growth, especially in beverages, that's positive.
Right. It is. And they've also reaffirmed their revenue guidance for the full fiscal year. So they're confident about continued growth. But then when you look at their profitability, it's a different story. Their gross profit margin did improve, reaching 29% in the latest quarter, which means they're managing their direct costs better. But their operating margin was negative 15.3%, and their net profit margin was even worse at negative 30.02%.
So they're still losing money, even with the revenue growth.
Right, and that comes down to controlling their operating expenses. Among other things, they need to find ways to become more efficient if they want to turn those losses into profits. Now, on the balance sheet side, their debt-to-equity ratio is relatively low at 0.10 to 0.11, which is good. It means they're not overly reliant on debt to finance their operations.
So they're not drowning in debt? That's a good thing.
Definitely. But then we have free cash flow, which is, the lifeblood of any business. It's the cash they have left over after paying for their operations and investments.
So how's their free cash flow looking?
Unfortunately, it's been negative in recent years, although they did report an improvement in fiscal year 2024. So that's something to watch closely because consistent positive free cash flow is essential for long-term sustainability.
Absolutely. You can't keep burning cash forever.
Right. Now, you also mentioned their price-to-book value ratio, which is pretty low. That can sometimes indicate that the market thinks the company is undervalued. But in Tilray's case, given their current financial performance, it's more likely that investors are concerned about their profitability and future prospects, which is why they're not willing to pay a premium for their book value.
So the market isn't exactly convinced about Tilray's future yet.
Not entirely. Now, to summarize their current financial situation, they're not profitable yet, despite the revenue growth. Their debt is manageable, but those persistent losses and negative free cash flow are definitely red flags.
Okay, so not exactly a glowing report card. But what about the longer-term trends? What do they tell us about their financial stability?
Well, their earnings have been quite volatile over the past 5 to 10 years, mostly negative, which reflects the challenges of the cannabis industry and the costs of their expansion strategy. They're not paying dividends, which, as we discussed, is understandable given their current situation. But on the positive side, they've been proactive about managing their debt, and they seem to be managing their working capital efficiently. So it's a mixed bag, some good signs, some not so good signs.
So the big question is, are their earnings volatile?
Yes, definitely. And do they have excessive debt?
It doesn't seem like it, at least not at this point.
Right, so that's a plus.
Yeah.
But they still need to address those profitability and free cash flow issues.
Okay, so that wraps up our deep dive into Tilray Brands, at least for the first half. We've covered a lot of ground, their business, their management, their financials. And it's clear that they're a company with big ambitions and a lot of potential. But they also face some significant challenges.
Exactly. They're not out of the woods yet.
Now, in the second half of this deep dive, we're going to explore how the market perceives Tilray, their ownership structure, and the risks and opportunities that lie ahead. So stay with us.
It's going to get even more interesting.
Now, moving into the second half of our deep dive into Tilray Brands, let's shift gears and explore how the market is currently viewing this company. We know their stock price has been volatile, but what's the overall sentiment?
Right. It's not just about numbers on a spreadsheet. It's about perception, right? How do investors, analysts, the whole market really feel about Tilray's prospects? And the data you've provided paints a rather cautious, even slightly negative picture. The significant drop in their stock price, over 60% in the past year alone, speaks volumes.
So not exactly a vote of confidence from the market.
No, not really.
No.
And then there's the high short interest, around 17% of the float. That means a lot of investors are betting against Tilray, expecting the stock to go down even further.
Okay, so that's not great. But what about the analysts? What are they saying?
Well, the average price target from analysts is around $1.94 USD, with a range from $1.25 to $3.
So some see potential upside.
Yeah, there's a mix of opinions. The ratings range from hold to moderate buy, suggesting that some analysts are more optimistic than others. And it's interesting to note how these price targets tend to fluctuate after Tilray releases its earnings reports, indicating that the market is very sensitive to their financial performance.
So it's a dynamic situation, constantly evolving.
Definitely. And then there are other factors that influence market sentiment, like recent news and developments. For example, positive news about their medical cannabis wins or their beverage alcohol business can give the stock a boost, but negative news, especially about their financials, can send it tumbling.
So it's a bit of a roller coaster ride.
Yeah, and the high short interest and the active auctions market with its high implied volatility just add to the uncertainty and the potential for big
It
swings.
sounds like Tilray is not for the faint of heart.
Probably not. Now let's move on to their ownership structure. Who owns Tilray? Who are the key players?
All right, let's look under the hood, so to speak.
Well, institutional investors own about 10 to 11% of the company's shares, with the top holders being the ETFMG Alternative Harvest ETF, Vanguard Group, and BlackRock. These are big players in the investment world.
So, a fair amount of institutional interest.
Yes, but insider ownership is relatively low, somewhere between 0.6% and 1.6%. That means the executives and board members don't own a huge chunk of the company.
But is that necessarily a bad thing?
Not necessarily. It depends on how you interpret it. Some might see it as a lack of confidence from the insiders, while others might view it as an opportunity for them to buy more shares if they believe in the company's future.
Right, it's all about perspective.
Exactly. And speaking of insider buying, it's worth noting that some executives, like the CFO, have recently purchased Tilray shares. That could be a positive signal, suggesting they believe the stock is undervalued.
Interesting. So, what's the overall takeaway from their ownership structure?
It's fairly broad-based, not dominated by any single entity or group. Institutional ownership is significant but not overwhelming, and insider ownership is relatively low, although there are some signs of recent insider buying. They also have some corporate governance measures in place, like a code of ethics and shareholder approvals for things like board declassification and increased authorized shares, which are generally seen as positive signs.
So, a mixed bag, but with some potential positives.
Right. Now let's move on to risk assessment, which is crucial for any investment decision. We can use a SWOT analysis framework to assess Tilray's strengths, weaknesses, opportunities, and threats.
That's a classic framework, SWOT analysis.
Yeah.
Always a good way to get a holistic view.
Absolutely. So let's start with their strengths. Tilray has a global presence, they operate in multiple countries, and they have a diversified portfolio, not just cannabis, but also beverage alcohol and wellness products. They own some well-established brands, they have strategic alliances, and they benefit from a vertically integrated cannabis model, meaning they control the entire process from cultivation to sale. They also operate GMP-certified facilities, which ensures high quality and safety standards.
So, they've got a lot going for them.
They do, but they also have weaknesses, right? Their persistent net losses are a major concern, and their operating expenses are high. They're susceptible to regulatory changes in the cannabis industry, which is still evolving, and they're exposed to the volatility of the cannabis market, which can be unpredictable.
So, it's a high-risk, high-reward situation.
You could say that. Now, what about opportunities?
Yeah, what's on the horizon for Tilray?
Well, the big one is the potential for further legalization of cannabis globally, especially in the US and Europe, which would open up huge new markets for them. The increasing acceptance of medical and wellness cannabis is also a trend that could benefit them. And there's the potential for international expansion into new markets and the growth of the cannabis-infused beverage market, which they're already well positioned to capitalize on. And of course, they could achieve further synergies from their acquisitions, leading to greater efficiency and profitability.
So, lots of potential avenues for growth.
Absolutely. But of course, there are also threats.
Yeah, no business is without its challenges.
What are some of the biggest threats facing Tilray?
Well, competition is fierce in both the cannabis and beverage industries. They face regulatory hurdles and uncertainties. The cannabis market could experience oversupply, leading to price pressure. Traditional industries are also starting to enter the cannabis space, bringing their own resources and expertise. And then there's the potential for consolidation in the cannabis industry, which could squeeze out smaller players. So Tilray needs to stay agile and adaptable to survive and thrive.
Absolutely. Now, after all this, what are your final thoughts?
Well, it's clear that Tilray is a complex company with a lot of moving parts. They're making bold moves, diversifying, expanding, but they're also facing significant challenges, particularly with profitability and that negative ROIC. The market sentiment is mixed, and there are both risks and opportunities ahead.
Exactly. It's a story that's still being written.
And the ending is far from certain. So we've done this deep dive into Tilray, and we've seen all the complexities, the challenges, the potential. But what does all this mean for the future, and what can we learn from Tilray's journey?
Well, there's a fascinating long-term trend that's emerging, and Tilray's story really highlights it, and it's something we think you'll find incredibly insightful, but we'll get to that in a moment.
Definitely something to think about. So, to wrap things up, we've uncovered a lot about Tilray Brands, their diverse business, their management team, their financial performance, the market's view, their ownership structure, and the risks and opportunities they face. It's a fascinating case study in a rapidly evolving industry.
Absolutely. And it really makes you think about the bigger picture.
Exactly. Now, remember that trend we mentioned earlier, the one that Tilray's story highlights? Well, it's the convergence of what were traditionally considered vice industries like alcohol and tobacco, with the growing focus on wellness and alternative products, all happening within a constantly shifting regulatory landscape. Tilray's trying to capitalize on this trend, but as we've seen, it's not without its hurdles.
Right. It's a complex and dynamic environment with a lot of unknowns.
Exactly. So if you're interested in exploring this trend further and understanding its implications, we encourage you to subscribe to the Stock Analytics AI YouTube channel for more in-depth analysis and insights on the market.
Definitely worth checking out. We dive into all sorts of interesting topics.
All right, so before we go, a quick disclaimer. The information we've provided in this deep dive is purely for informational purposes. It's based on the sources you provided, and it should not be considered financial advice. We've used artificial intelligence to help us analyze the data, but it's essential to do your own research and due diligence before making any investment decisions.
Absolutely. Don't just take our word for it. Do your own homework.
Right, and remember that we may see stock suggestions in the comments, but those are not part of our analysis. We're just trying to provide you with the information and tools you need to make informed decisions.
Exactly. We're here to empower you, not tell you what to do.
All right, that's all for today's deep dive into Tilray Brands. Thanks for joining us,
It's been a pleasure.
and we'll see you in the next one.
Until then.